specifically targeted MCSI. They're a global index provider. What have you heard back from that company?
Well, we got a letter back. They didn't really answer most of our questions, but what they did admit to is that they don't do any sort of vetting in terms of the companies that are being invested in. So they're not comparing their list of investments to companies that are sanctioned by the United States or the international community, companies that are actively involved in egregious human rights violations. At a minimum, there should be some disclosure there about that reality.
That was Florida Senator Marco Rubio, who joined us on Squawk Box on Wednesday. Rubio is part of a bipartisan group of legislators that are pushing for divestment from China, including the index of our next guest. Let's welcome right now MSCI Chairman and CEO Henry Fernandez. Of course, we're here with Ron Barron at the Barron Investment Conference. And Henry, thank you very much for joining us today.
Thanks for having me.
That was a soundbite from Marco Rubio. I'm sure you're familiar with what his concerns are about companies that have invested in Chinese stocks. Some of your indexes are allowed to do that in Chinese firms. Why don't you explain how that works and then what you think about the criticism that comes from that?
So the first thing to say is that the MSCI is not an investor or an asset manager or an investment advisor, and therefore when remarks are made as to how we direct funds one way or another, we're not the principal. We're an intermediary. We're an agent helping our investors figure out how to invest around the world in a good way. So indices are constructed, for every global investor anywhere in the world to be able to look at a market, and the only criteria is, can you buy and sell the shares in that market? Are the companies big enough? Do they have enough liquidity? Do we have enough size? Because a lot of our clients are institutional investors. Our indices are not meant to be, let's investigate this company because it has ties to the French government, or this other company because it has ties to the Turkish government, or anything like that. That is for investors to do themselves. Ours is more like a shopping list. Think of it like that. Ours is what is the universe of potential investments that you can make, and then you as an investor need to decide whether you like those investments, whether they have good value for you, whether those companies have links to other parts of the government or not.
His concern, though, Marco Rubio's, as he laid it out to us, is these are investments in companies that are doing all kinds of things that they shouldn't be doing. And by the way, they're not held to the same accounting standards, so it could be risky for investors to boot. I realize that you're just a middleman for some of these issues, but you do make decisions when it comes to ESG on things that you think you shouldn't be investing in. So how do you kind of put the juxtaposition of those two ideas together, where I'm just a middleman, we're just offering people advice, but there are some things we do think are bad that we wouldn't have people invest in?
Do you really tell people about what they should invest in, or you just give people the parameters and let them make their own decisions?
Yeah, we definitely create the tools for people to then use them to figure out what are their decisions, because we cannot tell investors what decisions to make. So we have two product lines. We have the market capitalization indices, which is that product line that then says, here is the total universe, complete total universe of securities in the world that you can buy and sell, and here's how they perform, so that you can then make a reference as to what your performance could be relative to the market. The second product line that we have is the sustainable investing product line, the ESG product line, which then takes that universe of securities and say, what companies, do they have good governance? Do they have good environmental records? Do they have good social records? And so on and so forth. And then we create indices out of that, and for investors to then decide if that is a good barometer and a good benchmark for them. But these are two separate things, two separate product lines that we offer, because again, we offer choice. We offer investors choice for them to decide what they would like to do.
If there is a law that's passed, as Rubio would like to see happen, where this would be illegal, how do you respond? How would you react?
Well, we ourselves and our clients, which are investors like Ron Barron, right? They need to comply with the law of their applicable country. So whether you're in France, you got to comply with the law in France or in Japan. So if there is a law that restricts the flow of assets by the U.S. into some country, then we will create specialized indices for those clients in that one country that take those legal and regulatory restrictions into account.
Can I ask just a question in terms of the potential risk for, let's say, a CalPERS or somebody who might be using some of these indices? My understanding is that in China, you're allowed to put a lot of investments in, but the rules on divesting is a little more complicated. They may not allow a company or an investor to take out their money if they're seeing constraints on capital or other issues that concern them. It could get gated, so to speak. Is that true?
No, it's not true. I mean, you can buy and sell in China, in the Asia market in China. We're not talking about the offshore market, but the Asia market in China. You can buy and sell. And there is a limitations as to how much money you can put in, how much money you can get out, and that's why the weight of the country in the index is very small relative to the size of the market. It's an emerging market, and you could potentially say they can impose restrictions on the flow of capital. But so does Brazil put restrictions on the flow of capital. Argentina is putting restrictions on the flow of capital. There has been threats by the Turkish government to put restrictions. So that's why it's a risky investment, because it's an emerging market. But it's no different than Russia or Turkey or Brazil or other places like that, right?
So to take what Senator Rubio is proposing and play the devil's advocate, and if he were successful in accomplishing what he's trying to do, what kind of impact would that have on flow of capital, on trade? Take us through a little bit. If he was successful, what impact would this be on markets?
It's a devastating impact. Devastating, because right now there's a trade war going on in the world, and that affects supply chains. When you start having a finance war in which you're restricting the flow of capital around the world, that disrupts the financial system of the world. So I believe that whatever caused the Great Depression, which was a severe trade restrictions, nowadays the amount of investments and flows, capital flows around the world is vastly higher than the amount of trade that happens in the world. So if you begin to say the U.S. economy, the U.S. government, as the most open and liberal economic and democratic society in the world, is setting an example to create severe restrictions on the flow of capital in the world, other countries are going to follow that. And therefore, if that happens, then we're going to have a world in which the fuel that lubricates economic growth and prosperity in the world is cut off. The oxygen gets cut off, and therefore you end up with a global economy that is significantly smaller than what we have today.
Your company has had an amazing run since it was spun off from Morgan Stanley. What did you say, up 10 times since
Maybe
2008?
More than that. We went public at $18 a share 12 years ago, and it's $220 today.
So what is it about indexes and investing investing in these indexes that is so popular today? How do you see that going from here?
I think what drives the growth of the company, and will continue to drive it in the next generation, is not just indices. What we are is an investment tools company. We provide the mission-critical investments that are necessary for investors of capital, allocators of capital, managers of capital, traders of capital, to make the process less friction. So whether it's sustainable investing, whether it's private equity investing, whether it's public real estate investment or private real estate investing, whether it is factor investing, passive investing, global investing, we give you the tools. We want to be the category killer, the largest supplier of all tools in the world that make the job that Barron and his team have a lot easier, and that is an incredible growth opportunity for a company like
ESG is a really big deal for them.
Yeah.
Henry, I wish we had more time to speak with you, but I really appreciate your being here today. Thank you.
Could I do one thing before he leaves?
Sure.
Then Henry has established a very large net worth for himself because of his role as a founder and because of his investment and ownership continuing in MSCI. And about, 6 months ago, when MSCI, so companies have a hard time, oftentimes, getting their founders, getting their directors, getting their executives to invest in their businesses. Henry has his whole net worth in his business. And basically, his board actually said to him, "We'd like you to sell a little bit of stock, Henry." And Henry said, "I'm not going to sell stock. I think I'm going to make 3 or 4 times my money in the next 10 years.
Absolutely.
Why should I sell any stock? What am I going to do with my money?" So here's a guy, his board actually asked him to sell stock because they thought he was taking too much risk having such a large investment personally in the business.
Henry,
thank you. And we're so happy to have you as a great shareholder of MSCI, and we hope you continue to be one.
I definitely am.